Hi, and welcome to Investment Banking University, where we teach you how to become an investment banker. Today we're talking about the very important topic of perpetuity analysis. Perpetuity analysis is actually a part of perpetuity science. Perpetuity science, as we have discussed in the past, synthesizes industry and the capital markets in relation to the perpetuity, and is ultimately the science of building, selling, and buying perpetuities. Perpetuity science can be taught and learned in the following manner. We're going to break it down into three parts, and then we're actually going to go deeper into perpetuity analysis itself. So the first part of understanding perpetuity science is understanding the nature of the perpetuity itself. So when first learning about industry and the capital markets, one should understand the nature of the perpetuity, which is the basis for industry and the capital markets. A perpetuity, of course, is an asset with a benefit stream that extends into the future without limit. The perpetuity can actually be modeled with the following formula. Perpetuity value equals CF, cash flow, the benefit stream, over R, our discount rate, or the risk associated with receiving that benefit stream. So that is the nature of the perpetuity. Moving on to the second portion of perpetuity science and learning it is understanding the sides of the perpetuity. And there are three sides to a perpetuity, which we're going to talk about in just a moment here. But the standard undergraduate business school and MBA curriculum at most business schools is broken down along siloed subjects, as we all know, such as accounting, finance, management, operations, marketing. And it actually attempts to teach students how to be a mid-level manager at a large corporation for the rest of their lives. Unfortunately, these jobs are mostly gone, having been shipped overseas or automated. And so this undergraduate business and MBA curriculum is thus outdated. And it's not appropriate for the 21st century when most individuals will have multiple roles and jobs throughout their careers and lives. So instead of a disparate business taxonomy along the functional lines, such as economics, finance, accounting, etc., we have an initial taxonomy broken down in relation to the perpetuity. Namely, number one, the build side, number two, the sell side, and number three, the buy side. So the build side, of course, is associated with the building of perpetuities by entrepreneurs and corporations. The sell side is the selling of perpetuities associated with investment bankers in Wall Street. And then the buy side is the buying of perpetuities by private equity and corporate M&A departments. So within each of these three, we have various methodologies and optimization models that may in fact touch on the various functional subjects such as accounting, finance, and economics. And we also have a key question associated with each side of the perpetuity. So the key question associated with the build side is how to build a perpetuity, and we have a methodology for doing that. The sell side is how to sell a perpetuity, and we of course have a methodology for doing that. On the buy side, the question is how to buy a perpetuity, and we have a methodology for that as well at Investment Banking University. So by starting with perpetuity science itself, the student can better synthesize the various moving parts of industry and the capital markets. So the third part of learning perpetuity science is understanding the phases of the perpetuity. So the CEO's role is to bring a company or opportunity through the various stages of a perpetuity by building recurring benefit streams, i.e. cash flows, and at the same time de-risking those benefit streams. In doing so, the valuation of the perpetuity moves from a backwards looking towards a forward-looking methodology of valuation and is thus maximized and is based upon future earnings. The CEO should thus be familiar with perpetuity science and the phases of a perpetuity. So as the perpetuity changes, the formula for valuing the perpetuity itself changes as well. So there are 5 phases of perpetuity building, and as we move through the phases, the role of the owner of the perpetuity becomes more passive, and the valuation of the perpetuity becomes larger due to the size of the EBITDA increasing, the EBITDA multiple increasing, and the discount rate decreasing. The perpetuity becomes less dependent on the owner to exist and runs as an organizational structure is formed, coinciding with the division of labor, process automation, and revenue becomes recurring. So here's a quick breakdown of the phases of the perpetuity. Number 1, we have syndication, and we can think of that as getting to PMT, or our first payment. Number 2 is job shop, from PMT1, PMT2, PMT3, all separate jobs. The third phase is perpetuity itself, moving from PMT to actually a cash flow to establish valuation. So that's CF over R. Number 4, a growing perpetuity, is transitioning from CF over R to CF over R minus G, where G is the growth rate, which actually decreases R, which increases our valuation. Number 5, diversified, that we can think of as perpetuity 1 plus perpetuity 2. So that is the basis for perpetuity science. And so getting into perpetuity analysis itself is what we're going to do next. So the goal of perpetuity science, of course, is the building, growing, management, exit, and buying of perpetuities. So ultimately, while learning about perpetuity as science itself, the student is actually looking for and actively looking for perpetuities to create, how to advance a perpetuity to the next phase of perpetuity in the perpetuity phases. Number 3, perpetuities that should be exited from. 4, perpetuities that should be purchased. And so we are going to talk a little bit more about perpetuity analysis itself, which we talk about in Investment Banking University. So perpetuity analysis is performed with an understanding that the perpetuity's ideal course of action at any given time is related to one of the 3 sides of the perpetuity: the build side, the sell side, the buy side, which depends on the phase that the perpetuity is in. So when we're performing perpetuity analysis, we have our first step, which is analyzing the industry and sub-industry and building an index for the sub-industry as well as the industry made up of public comps. We're then going to benchmark these public comps into different phases associated with the perpetuity phases. Number 3, we're going to build a financial statement model for each of them. And then number 4, we're going to actually determine the valuation by building a DCF comp company and precedent transactions into a valuation football field. Number 5, and then we're going to compare the peers in the perpetuity phases to the intrinsic value to determine if this is a buy side, sell side, or a build side deal. Then the question there is, where are peer multiples at in relation to intrinsic value? So that at a high level is perpetuity analysis. And we're going to go into much greater detail in Investment Banking University's course. And you can actually find it in the book, Investment Banking, which is free at investmentbankingu.com. So check it out, get the book, and then when you're ready, take the course online, take it in a weekend format, or take it in a month-long training format. So we look forward to seeing you. Thanks a lot.